traders, welcome back to another mindset video. So this is more like a mindset training, and I want all of you to please be very focused on this one. Let's talk about mental capital. So we all know that there are two types of capital. The first one is financial capital. Then of course we have mental capital. So which one is more important? Obviously mental capital. And I always told all of you to become a good trader consistently in the long term, the first thing you have to master is respecting your mind, respecting your thought process, respecting your mental capital, knowing exactly when you'll be vulnerable to making stupid mistakes. That's really important for you to achieve a very healthy equity curve as well, because lots of traders fail in trading not because they're bad, purely because they do not know when exactly are they going to make mistakes. What kind of market conditions are likely to sort of pinch their weak spot? And that's one thing I want all of you to always remember. Becoming a good trader is about studying yourself. It's about understanding when exactly are you likely to make mistakes. Like myself, I don't like to get involved in a choppy condition. All of you know that every time when the market is getting choppy, is getting slow, I'll post up in a group and I'll say that I personally will be taking a step back. Why do I say that? It's because every time when price starts ranging or swinging back and forth, that's usually when market does a lot of fake out. Slightly break through the high, come all the way back. Slightly break through a low, reverse all the way up. So this kind of condition are my weak spot. And every trader have their own weaknesses. No trader is going to be perfect across all market conditions. But which is your strength? Which is your weakness? I want all of you to find out yourself. Like for example, me, I'm a very good reversal trader. I'm good at finding turning points. But for some of you, maybe you are more of a confirmation trader. You like to receive, you like to see more evidence, more confirmation before you jump onto a setup. So in this case, you are possibly a good trend continuation trader, because to trade a trending setup, you need to wait for market to make its first impulse first, then you join the pullback, right? That's a nice trend continuation trader. So just figure it out yourself. How can you find out what are you good at, what are you bad at? Go back to all your journal. Remember, one big thing about recording, about taking screenshots, about writing down your pre-trade, post-trade thought process every day is not me here being strict as a coach trying to force you to do things that you're uncomfortable. I'm not trying to force you. If you don't want to do your journal, that's fine. But my job is to make sure I give all of you proper information on what has made me to the current level that I am. And I'll be honest to say, out of everything that you're doing in trading, the most important thing, hands down, goes to journal. Because once you start having the habits of taking screenshots, writing your self-reflection, writing your thought process, you are actually going deep into your mind, into all your decision-making process and say, hey, why did I do this? Why did I close the trade? Why did I get out with a big loss, not a small loss? Because when you go back to a journal, you'll find out that a lot of times mistakes repeat itself, and your job as a trader is to make sure not to eliminate mistakes, because no one is perfect. You're bound to make mistakes again and again and again. If your expectation is saying that, oh, Neo is an experienced trader, as a coach I shouldn't make mistakes, then you are having the wrong mindset approach. Because no matter how experienced you are, you will still make mistakes over and over and over again. And that's the ugly truth about trading that none of these so-called gurus will tell you, because they are so busy trying to package themselves as a perfect trader. But from my opinion, no traders, none of them are going to be perfect. The best traders are those who know when are they vulnerable to make mistakes, therefore they perform some sort of preventative measure. If let's say you know you are likely to take a loss in the Asian session because maybe 8 out of 10 trades Asian session setup are usually a loss, then to tell yourself, to give yourself the affirmation of saying, I don't trade the Asian session from now on because I'm likely to lose money. Once you start having that kind of confidence, that kind of affirmation, it simply just instantly boosts your confidence. And what you're doing is protecting your mental capital. Go back to the topic, remember, mental capital is not just about having a risk per trade, having a max drawdown limit. That's not how you protect your capital. I'll give you one example on the chart. So one setup that Chidi took yesterday was a pound Kiwi short, right? He shorted somewhere there, stop loss above, and his initial target was all the way down. So when price started bouncing that moving averages, when price started bouncing that previous structure, his instinct told him that feels like it's going to reverse all the way up. And guess what? Chidi closed out the position for maybe a 1 hour, 1.5 hour winner. So some of you looking at this, you might say, hey, Chidi wasn't respecting his trading plan. But from my perspective, it's not that case. Why do you think you have instincts? Honestly, the main reason why you have instinct is because something have happened in the past, or you have encountered, or you have seen something in the past that is hinting you that history could happen. That's instinct. Last time when price does XYZ, it's likely to reverse all the way up. That's why Chidi chose to say, I'm happy to close out my position. And I'll give you one more example on pound Aussie. I took a short on pound Aussie, and JL, one of our members, took the exact same setup as well. Why did I chose to close out the position at 3R when I feel like it has potential to run for 5 to 6R? The main reason is because 3R was where the nearest structure was. And I was thinking in terms of mental capital. If I don't close the trade at 3R, what if price really does bounce off this previous structure just like this one? Exactly like this one. What if price bounce off that level and continue chopping for another 10 to 15 hours? Am I going to sleep with so much stress? Or am I going to just move my stops to break even? Not really. So my decision at that point was, I'll close out the trade. I'm happy to close out for about 3 hours, about $9,000 profit. Is not bad. And if there's any more potential, I can always come back the next day. Unless you're having setup that you clearly say this is a potential swing trade, then of course you're allowed to just go to bed, leave the trade to run, because it's meant to be a swing position. It's meant to hold for 2 to 5 days. So what I'm trying to tell you all is really trading is not just about how can I minimize my drawdown, how can I reduce mistakes. It's also about understanding when your mental capital is likely to be exhausted. So therefore, you are trying to say, hey, I know I'm not going to be perfect every single day, but as long as I know when am I vulnerable to make mistakes, when am I going to get pissed off, when am I going to trade on tilt, then ultimately your mental capital will always be protected at the highest performance. And once your mental capital is protected, once you boost your mental capital, your trading confidence will naturally go up as well. And when your confidence goes up, your entire performance will go up, because everything are just in flow. That's how we define flow state as well. So that's it for this mindset sharing, and I hope all of you learned something new. So if you like the video, please don't forget to like, share and subscribe, and let me know if you think mental capital is such an important element to any of your trading success. And I'll talk to you next time.